Welcome back guys, Crypto4Life channel. Today we'd like to talk about a classic patterns, double top and double bottom. Let's dive in. First of all guys, you should know on this channel I never post like random clickbait videos. So try this strategy and you will be a successful trader. So trade this pattern and you will get a 100% win rate trades. No guys, it doesn't work like this one. Market dynamic, and we have to work in a complex with the news, with seasonality, with the macro data, with the time frames, because if you find some pattern on the 4-hour time frame and it looks pretty like in a book, it doesn't mean this pattern will play out, because on a higher time frame we form totally another formation. I would like to show you just a theory and a few examples, but it doesn't mean all that patterns from the books doesn't work. No, they work, but with different win rate. And I already explained to you, if some guy watched 600 hours ICT mentorship, it doesn't mean he will be more successful trader than the guy who traded classic patterns, the candlestick, and just the basic price action. For example, both of that patterns are reversal patterns, but one is bullish, another one is bearish. Double top, it's a bearish pattern. This is just a classic formation of a double top. In most cases, you will never see so beauty and correct formation of double top. And also you have to pay attention the time frames. This is how it looks like in a theory. We got an impulse, correction, form the liquidity pool, impulse, first top, then we retest at that level of support, another pump, and this top can be higher or lower, because in a box, of course, they tell you that right top should be not higher than this top. But guys, I would like to show you an example on the Bitcoin. We form it just a higher top, sweep liquidity, and drop it down. Most likely we just hunt liquidity. So over that left top, we got to stop losses. That's why with the weak cattle, we can sweep it. On a line chart, maybe you will not find that new top. So this is just a formation. By playbook, of course, you should open your trade here on retest of support like resistance. So double top formation, drop, retest, reject, and here you open trade. Stop loss should be over here. This is how the double top looks like. The same way we find out the double bottom. After second bottom, we can form the third bottom. And I would like to show it on a pure example on the DeWitt. Also, why you have to use everything in complex, because based on the classic TA, you know, the people open longs here. We can see something even like this one, depends of time frame. So let's say this is a 4-hour time frame. We form something like this one. At this area, everybody open longs, but then we got like this move with continuation of the downtrend, because on the 12-hour time frame, we got a totally bearish scenario. All that pattern works, you know, but you should be careful and not trade by just some books rules, you know, because in the practice, everything not work like on the theory. So let's find out on a real example, double top. First of all, monthly time frame here. You can find out this was a pure double top, 1, 2, and bear market. So it was a pure reversal pattern, downtrend. First top, correction, another top, we sweep that high, you know, grab liquidity and collapse it down. Also, take a look what you have to pay attention. When we form the second top, most likely we see more buyers. If you go to the line chart, you can find out. So yes, this is a double top, and more legit that pattern will be if we will spend more time between that tops. So for example, this is a monthly time frame. We form it a top in April. The second top we form it in November. So almost half year between that candles. Here is example on 1-hour time frame. Here's the impulse. We form the top. Here we use the trend line like a magnet. Double top, drop, bounce, sweep that liquidity pool and collapse it down. So basically this formation works perfectly well. On a line chart, it looks like this one. So the same story with a double bottom. For example, this is a drop, bounce, drop, and reversal move. It's on 1-hour time frame. 4-hour time frame, it looks like this one. Drop, bounce, drop, form double bottom. The size of that trade can be like this one. So at least to this area. Size of the bottom. So we can find out many formation like this one. Now let's take a look at another example why not all the time the patterns playing out perfectly well. For example, this is a weekly time frame, DWX. So we got a drop, bounce, drop, form the perfect like double bottom, right? And base it on that analysis. So let's say this is a top, this is a bottom, and all traders open a position here on that breaking out. What we can see next, we can see retest of the top. In this area, people can start buying, but what we can see after that, we see the downtrend and form triple bottom. So this example, not all the time you should trade at patterns. And take a look, if you buying here around the breaking out of that levels, your even spot position could be minus 63%. So we form the triple bottom. And take a look, of course, it will not play now till penny, right? By that size of triple bottom or double bottom. So we count the size, just approximately from that top, we should hit like $4.32. And we hit that level, this one. Of course, it took time because we formed the triple bottom in January 2023, but that pattern playing out only in November 2023. I recommend you to build a strategy, not a trade, just patterns. Because not all that patterns, even if we playing out till penny here, we can drop it down after the year and sweep that liquidity pools. Hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.